Taxes. Can you think of a more boring topic to talk about? I mean, I can't think of many more boring topics, but today I'm going to try to talk to you about top 10 tax planning ideas for 2021. One of our goals at Intelligent Investing is to minimize fees, and we think that taxes are one of the biggest fees Americans face. Before we begin, keep in mind that some of these ideas may be offset if you are subject to the Alternative Minimum Tax, AMT, and each person's unique situation may limit some of these ideas. There may be exceptions, nuances with these tax planning ideas, so it's best to consider these with your CPA or tax specialist. As a CPA myself, I wanted to share with you my top 10 tax planning ideas for 2021. Number 1, tax bracket management. Consider the timing of your income and deductions to avoid higher tax brackets. With the increase in the standard deduction under recent tax law changes and the scaling back of many popular deductions, fewer taxpayers are choosing to itemize deductions. Some taxpayers may benefit by alternating between claiming the standard deduction in some years and itemizing in other years. Investors may want to bunch as many deductions in those years when itemizing. For example, taxpayers may want to consider making substantial charitable contributions during a tax year when itemizing instead of making those regular annual gifts. Number 2, Roth IRA conversions. Although we may not know where taxes are heading in the future, a strategy utilizing Roth conversions can be an effective way to hedge against the threat of higher taxes in the future. Lower tax rates now translate to a lower cost for converting traditional IRA assets to a Roth IRA. Consider a Roth IRA conversion, especially in those low income earning years, such as the years between retirement and when Social Security benefits begin. There are special rules and other things to consider, including paying the tax on the conversion amount, but this can be a very good tax play. Number 3, max out your 2021 IRA contributions. Keep in mind, you must have earned income to contribute to an IRA. The maximum amount you can contribute to a traditional IRA or a Roth IRA in 2021 is $6,000, or 100% of your earned income, if less. The maximum catch-up contribution for those age 50 or older remains at $1,000, for a total of $7,000. There may be limitations to your deduction depending on your tax filing status, your income, whether you're covered by a retirement plan at work, and whether your spouse is covered by a retirement plan at work, but this can be a great idea for you. Number 4, max out your employer retirement plans. The deadline to contribute to a 401k plan and be able to reduce your taxable income on your 2021 tax return is December 31st. In general, the maximum amount you can contribute, your quote elective deferrals, to a 401k plan is $19,500 in 2021. If you're age 50 or older, you can also make catch-up contributions of up to $6,500 to these plans in 2021. Number 5, save for college and beyond. Boy, college is getting more expensive by the year. Earnings in a 529 plan, a college savings plan, can grow federally tax deferred, which means your money has a chance to compound faster because you don't have to pay taxes on current investment income or capital gain. Even better, withdrawals are tax-free as long as you use the money to pay for qualified education expenses, which typically include tuition, books, school supplies, and room and board. Contributions to a 529 plan are after tax and not federally tax deductible. However, if you invest in your own state's 529 plan, or if your state is a tax parity state, you may benefit from a state income tax deduction or contributions on state tax exemptions on withdrawals. These last 5 tax planning ideas are related to giving. Number 6, gifting to family. Consider outright gifts to children, grandchildren, etc. There is an annual $15,000 gift tax exclusion, indexed for inflation, for assets you give to individuals. It's separate from the lifetime gift and estate tax exemption. Using the annual gift tax exclusion ensures that every penny of your $15,000 annual gift is excluded from your $11.7 million lifetime gift and estate tax exemption. And because annual gifts reduce the size of your estate, they also reduce the potential tax liability for your heirs. Number 7, give appreciated non-cash assets. By giving appreciated property such as stocks, real estate, private shares, you can avoid recognizing the gain on the property and receive a charitable income tax deduction based on the fair market value of the property transferred. You, the donor, receive an income tax charitable deduction for the fair market value of the property transferred. Number 8, give more to charity this year. I know a lot of charities and nonprofits are needing funds this year, and the tax law extended the CARES Act, eliminating the adjusted gross income limitation for charitable deductions in 2021. An individual taxpayer can deduct 100% of his or her charitable contributions in 2021. Now keep in mind, this excludes contributions made to donor-advised funds, private foundations, or supporting organizations. But still, it's a great way to give to charities and get a tax benefit. Number 9, give even if you don't itemize. So a lot of you might just be using the standard deduction, and that's fine. For 2021, taxpayers who don't itemize can take advantage of a $300 above-the-line deduction for cash contributions to qualified charitable organizations. And keep in mind, if you're married and you do a married filing jointly tax return, it's $600. And finally, number 10, consider a qualified charitable distribution. Currently, the tax law allows an IRA owner who has attained the age of 70 and a half to distribute up to $100,000 annually directly to a charity without recognizing income. And the distribution also counts towards an individual's required minimum distribution. Boy, that's a great idea. But keep in mind, this excludes giving to donor-advised funds, private foundations, or supporting organizations. At Intelligent Investing, we consider tax loss harvesting and other investment-related tax planning ideas that I didn't share in this video. But if you're interested in learning more about these or becoming a client, be sure to visit our website, investedwithyou.com. So today I shared with you some of my top 10 tax planning ideas, but I'd love to hear from you on what your favorite tax planning ideas are. So be sure to comment below. And again, thanks for watching.